here and hope that you managed to take a restful break over the festive season. I'm Ju Mei from the Professional Standards Division of ISCA and also Secretariat to the ISCA Auditing and Assurance Standards Committee. The WSC, under the purview of ACRA's Public Accountants Oversight Committee, develops Singapore's auditing and assurance standards and monitors standards-related policy and implementation issues. So we recognize that the grants landscape plays a crucial role in supporting businesses and driving economic growth in Singapore, and effective reporting is an essential component of this ecosystem, ensuring transparency, accountability, and proper administration of grant schemes. So through this session, we hope to raise awareness of the various standards available to support such reporting and also to provide some guidance on how they are applied. Please be reminded that the session will be recorded, but to be assured that the audience will not be filmed into the recording. But we will be taking some photos and videos for social media purposes. Today's session will start with a 45-minute presentation on commonly used frameworks by practitioners in grants and incentive reporting, followed by a Q&A session. During the Q&A, if you prefer not to ask questions in person, you can scan the QR code on the screen and submit your questions online. Okay, this presentation will provide an overview of the differences among the frameworks used by practitioners, considerations for grantors when determining the appropriate framework, as well as some answers to frequently asked questions on the subject. Okay. Without further ado, let me introduce the speakers. So our first speaker, Ms. Angela Liao, is a director from Deloitte and Touche Singapore office within the Deloitte Southeast Asia Professional Practice Department team, assisting in overall audit and assurance technical related matters. Our second speaker, Ms. Eileen Tay, is Senior Manager from Ernst & Young's Professional Practice Assurance team. Both Angela and Eileen are also members of our AGS1 subcommittee, which supports the WSC in providing guidance on illustrative auditors' reports. Now, I'll pass the time over to Angela to bring us through the first part of the presentation.
Okay, good morning, everyone. First of all, thank you, Iska and Tsumi, for the introduction. And it's a pleasure to be here today on behalf of Iska and the AASC to be able to, take you through some parts of this sharing session. And so we do have quite a bit of contents, right, to cover. So let me move straight into the contents proper. Okay, so we want to kickstart today's session with an overview of the commonly applied frameworks, in the context of grants and incentive schemes, right, which is really the key focus of today. And as you can see on the slide, you will see certain acronyms, numbers like SSA 3000, SSRS 4400, and also SSA 805. So do not be too concerned. So essentially, these are the professional standards, right, which governs which governs the practitioners' engagements and commonly applied in the context of grants and incentives schemes. Okay, so now the choice of these frameworks, right, are typically dependent on a few factors, and one of the key ones will be relating to what is the underlying subject matter information. So as it relates to grants and incentives, most of the terms and conditions are generally non-financial in nature. For example, when we, for example, talk about employment condition, which you all would be familiar with, look at headcount information, or maybe you would be interested in certain job designations, or whether the employees are being sent for training, upscaling, or sometimes we may even be looking at operational related data, like for example, number of workstations or the usage of certain equipment or assets that's purchased. So you can see that these are all essentially non-financial. And therefore, the focus of today's session, we will really be touching on two of the more commonly applied framework, which is SSAE 3000, okay, or we just call them 3000, or SSRS 4400, which we commonly refer them to the Agreed Upon Procedures or AUP standard. So that will really be the focus of today's session. Okay. So moving on, as a very quick high-level overview, we thought it would be helpful to put down the comparison of SSA 3000 and 4400 in a table form, easier for you to see the key characteristics of each of these two standards, and then better enable you to appreciate the differences. So Eileen and myself later will deep dive a bit more into the 3000 and 4400 in detail, but here we are just setting out an overview for you to see what are the key characteristics and the differences. So if you look at the table here, you can see definitely from the 3000 is essentially an assurance standard. Okay, so there will be some form of an assurance that you will be able to see in the report that you will receive from the practitioner. All right, so there will be, generally two levels. One will be a reasonable level and limited a level of assurance. Okay, and being an assurance standard, there will be certain preconditions to be met before the practitioner can undertake an assurance engagement. Okay, so this I will go into more detail later. Now, in comparison, the 4400, as I've mentioned, is our typical agreed upon procedures. Now, as the name says, it is essentially the grantors like yourself, the grantees, and us practitioners coming together, agreeing a set of procedures upfront to be performed for this scheme or this grant scheme. Okay, so once these procedures are agreed upfront, the practitioner essentially just carries out the procedures, and then in the report they will just factually report their findings from the execution of these procedures. Okay, so in that sense, you will not see any form of a conclusion or any form of assurance being provided in the AUP report. All right. And with that, with the context and the background and of the nature of an AUP engagement, there is therefore no requirement under our professional standards and our code for the practitioner to be independent of the grantee. Okay. However, notwithstanding that, being professional accountants, right, we will still be required to comply with the ethical requirements set out in the code. So minimally, the practitioner will still need to be objective and will have to carry out the AUP engagement, with professionalism and due care. So minimally, the ethical requirements will be complied with. So unlike, from an assurance standard perspective, because an assurance conclusion is being expressed, therefore, we are required under the code to maintain independence and comply with the relevant independence requirements. All right? And of course, intuitively, we can expect that in terms of the scope of work to be performed, the nature, timing, and extent of procedures, it will definitely be more extensive in a reasonable assurance engagement compared to a limited assurance engagement. And I will go into that in a little bit more detail very shortly in the next section. Okay? So with that, I hope this gives you a very, high-level overview of the key differences. And we wanted to take this opportunity to also then highlight that because as practitioners, professional accountants, we are, whenever we undertake any engagement, be it under 3000 or under 4400, we are bound by the requirements of these standards. And these standards sets out, the scope of work, certain requirements, required procedures to be performed perhaps, and even all the way to reporting. So how the assurance report will look like, how the AUP report will look like, or what are the language and the wordings that can be contained within or cannot be used, for example. So therefore, we just want to share that as much as we would like to accommodate any requests from grantors or even grantees on certain amendments, to the scope or to the reporting language, right? As professional accountants, at the end of the day, we need to always make sure that we comply with the standards. And so we will need to evaluate each of these requests on a case-by-case basis and to make sure that we will still be able to comply with these requirements. Okay? Alright. So with that, I will move on to assurance engagement. So I'll deep dive into this and I'll pass on to Eileen later to take you through the AUP engagements framework. Okay, so I think the first question, what is an assurance engagement? I know most of us here are not accountants, and even sometimes within the profession we find it hard to articulate what does an assurance engagement really mean? What does it entail? Right? What does the practitioner do? In order to issue the assurance report, right? So sometimes we see this as like a black box. So what actually goes on in there? So I will touch on a little bit on this black box later, right, as to what are the procedures the practitioners typically perform. But before that, let's just focus on, what is an assurance engagement as set out in the standards, right? We really wanted to preserve the language used in the standards. So if you were to read, you might still find that it's very technical and not very easily understandable. I will try my best to make it more relatable, okay? But if you were to focus on the right box, you can see that there are just two things I want to call out. Okay, the first is, of course, an assurance engagement's objective is essentially to enhance the degree of confidence that you, the grantors, as the intended user, will have in what the grantees are telling you, right? So if the grantees say, I have complied, I have prepared this statement of compliance, and I've complied with all these, whatever you have set out in the award letter. By subjecting it to an assurance engagement, it is intended to enhance your degree of confidence in what the grantee is telling you. So this is pretty straightforward, right? I think we can appreciate that. But what is more important is the next part, right? If for example, we come and say, okay, I have complied, is it meaningful to you? If the grantee submits this statement of compliance and the practitioner says, okay, the statement of compliance is properly prepared, is that meaningful to you? I think the question would be, what does properly prepared mean? Properly prepared in accordance with what? What is the criteria or measurement basis that you have evaluated the grantee's compliance, right? So the technical term here used in our standards is the criteria. But if we put it in a more layman term, at the end of the day, it is to have a common, consistent, and measurable basis, right? That the grantor, the grantee, and the practitioner all have this common benchmark to evaluate what does compliance mean, right? Because if we do not have that common, consistent understanding, I may be, in fact, giving you a false sense of assurance that, oh, the grantee has complied. But maybe what they think is being compliant or what I think is being compliant is not what you, as the grantor, think is being compliant. So therefore, having that consistent measurement basis is fundamental to an assurance engagement. Okay? And if I can just, give another example for some of you who may be more familiar with financial statements, right? Financial statements. If you look at the financial statements and the financial statement says the financial statement is properly prepared, again, it will not have meaning unless I tell you it is prepared in accordance with, for example, IFRS accounting standards, SFRSI, right? FRS in Singapore. Then we all know, right? We have a common alignment between the preparer, the practitioner, and the users on, okay, what is that benchmark in which these financial statements have been prepared. So I think similarly for grants and incentives, in the context for assurance engagement, we need to have that criteria. Okay? So with that in mind, then you can probably, appreciate the conclusions that the practitioner will provide in an assurance engagement will always, need to call out what that criteria is. So in this case, it will be the terms and conditions, of the grant scheme set out in the award letter. And of course, we expect the award letter will contain all the more specific criteria on the KPIs or the targets that the grantee is supposed to achieve. So the criteria will be a big, definitely featured in the conclusion, all right? Be it reasonable or limited. Okay? And the other part I thought might be helpful to share is you will always see that in our conclusion there will be this term in all material respects, right? Be it in a limited or in a reasonable, you will see this term. And some of you may not, be very familiar what does that essentially means. And from a layman perspective, basically the point here to make is that no assurance engagement can ever give you an absolute assurance or 100% guarantee that everything is fine. Everything is free from errors or misstatements. So the term in all material respects is really just a technicality that we put in to make it clear that this is not absolute 100% guarantee assurance. Alright? Okay. And between limited and reasonable, as it says, right, limited assurance will always feature the term nothing has come to my attention that the statement of compliance has not been properly prepared in accordance with the grant scheme, or in this case, nothing has come to my attention that the grantee has not complied, right, with the terms and conditions. So, whereas for reasonable, it will be in a positive manner. Okay, so that is really the key difference in how you will see the difference in the assurance reports between limited and reasonable. Okay, so now let's move on and touch a little bit on this scope of work, which is that black box that I was talking about, and which many of you as grantors may always be very curious to know. So what exactly has the practitioner done, right? And the real reason why, or the reason why we often have this question is because no assurance standard will prescribe that list of procedures that a practitioner is supposed to perform. You will never see that, oh, you need to inspect this, you need to do this, you need to send confirmations, etc. What the standards puts out is a suite of available procedures that a practitioner can perform, and the practitioner is then supposed to apply their professional judgment, right, based on their planning and understanding from the entity, what the systems, controls, processes they have in place, based on the assessment of areas where there's, greater potential non-compliance with the terms and conditions or higher risks, right? So based on all these, and also very much driven by the underlying term and condition itself, they then select the most appropriate procedure to perform, or a combination of procedures, and at the end, it is to ensure that they obtain the level of evidence necessary to provide that conclusion, right? So be it limited or reasonable. Like I mentioned earlier, reasonable, well, we will definitely expect higher level of evidence to be obtained, right? So you see the suite of available procedures can entail inspecting underlying supporting documents, right? We can look at, if it is internal control related, we can observe how a control is performed or re-perform the control activity and see if we come to the same outcome, right, as the grantee. We can send confirmations to external parties, or recomputation, recalculation, or even just doing simple analytical procedures or inquiries in combination, right? So there's really no one size fits all approach when it comes to designing the procedures, and we have to then leave it to the professional judgment of the practitioner to design the appropriate one. Okay, so I thought it might be easier if I use an example to try to articulate how the practitioner may choose a procedure to perform in a limited versus a reasonable assurance engagement. So let's again use employment condition, right, as one of the example. Let's say that one of the terms and condition that the grantee is supposed to comply with is to hire X number of employees by the end of year 3. Let's just say that, okay? And they also need to ensure that the employees' time, more than maybe XX%, are spent on designated projects. Okay, let's just say that this is the terms and condition. Now, with that in mind, the practitioner will come in and say, in order to check employment of these employees and their time usage, amongst the available procedure, it seems most appropriate to do an inspection of the underlying supporting, check to employment records, right? payroll records, check to time charge, right? Utilization, because we need to make sure that a certain percentage of the time spent is on designated projects, right? So inspection, right, combined with some recomputation might form the key procedure to be performed. Now, and this can apply for both limited and reasonable assurance engagement. Okay, they can decide that I want to, this is the most appropriate nature or procedure to select. But what would be the difference between limited and reasonable in this case could be when the practitioner determines the samples or the number of employees to check, they can say, okay, because this is limited, I select a smaller sample size. So they can vary by extent of testing by doing a lesser samples for limited and more samples for reasonable, based on the practitioner's own methodology. So sometimes the difference between a limited and reasonable could be just in terms of extent of testing, but the nature of the procedure could be the same. I mean, this is just an example, right? Because the practitioner may determine that it's not meaningful to just do an analytical procedure on headcount numbers, right? All right, okay. So therefore, one of the things to share is that although the professional standard sets out that the procedures for limited assurance primarily includes analytical procedure and inquiry, actually many times in practice, the practitioners do more than just inquiries and analytical procedure, even in a limited assurance engagement. Okay, and so to help you to visualize, right, I always see it this way. You can look at assurance as a spectrum: no assurance and reasonable assurance, and the in between is your limited. So the limited is a wide spectrum. It can entail some procedures just to give you slightly more than no assurance, or it can be all the way to doing almost like a reasonable assurance but just slightly lesser. So this is where the professional judgment of the practitioner really needs to come in to decide what is the appropriate a combination of procedures or the extent of testing that they need. Okay? Now let me extend it further to using the same example just now, and let me just extend it further for a reasonable assurance engagement. Now, assuming I'm being asked to perform reasonable assurance, I may also decide that it is not good enough to stop at inspection. Perhaps this grantee has, it's a huge, huge business entity, many employees, assuming, right? And they may think that it will not be sufficient to just do a sampling, right, to get the reasonable level of assurance because of the size and the number of employees that the grantee has. So the practitioner can do one more step to say, okay, in this case, it would be important to rely on the internal controls of the grantee themselves on how they themselves actually ensure, that they meet the terms and conditions. So how did they create the proper charge codes? For example, right, for the employees to charge their time to the designated projects, how do they make sure the employees are, tracking all this on a timely basis? And as a practitioner, we can see that it will be better to rely on the operating effectiveness of the grantee's own controls coupled with inspection of some of the documents so that I can give a reasonable assurance engagement. Right, so for reasonable assurance engagements, we can also go towards controls testing if we believe that is necessary to enable us to get this level of evidence that's needed. All right, so just with a simple example, you can see that there are different variations, and it really depends on the size of the entity. Like I said, what are their own systems, what's our assessment of the risk of non-compliance, etc., etc. Okay. Okay, now I want to touch on the point on preconditions, which I briefly talked about during the overview, right? I mentioned that preconditions is very important in an assurance engagement because our professional standards sets out that if you do not meet any of these preconditions, as a practitioner, we cannot enter into an assurance engagement. We cannot proceed. So as the as the term goes, right, preconditions, these are always assessed upfront during the engagement acceptance stage before we even enter into the assurance engagement. This is what we are supposed to evaluate. And if we, based on our evaluation, we are not able to fulfill any of these, practitioners cannot proceed with an assurance engagement because this is set out in our standard. All right. So there are quite a number of preconditions, as you can see. I will only want to touch on the two that's in red because if you look at the rest, pretty self-explanatory. For grants and incentive scheme engagements, typically we do not generate encounter issues with the rest. They're pretty straightforward and easily fulfilled. But the two preconditions that we may encounter issues with fulfilling will be the one on suitable criteria and then the ability to obtain evidence. Okay, so I'll touch on a bit more in the next two slides. Now, suitable criteria. So going back to what I mentioned earlier, right? I think I have emphasized enough the importance of why the suitable criteria is important. In layman's term, is essentially that common understanding, common benchmark between the grantor, the grantee, and practitioner, so that we are all saying the same thing. We are not having a different expectation of what compliance means, right? Okay, so we gave you two examples here to show you how terms and conditions can be further refined to make clear the criteria to evaluate the compliance of these terms and conditions. So we do have situations where sometimes the terms or condition being set up could be a bit, vague or difficult to appreciate. So if you look at the first one, okay, let's just run through it together. We are talking about sending employees for training, correct? Now, if you were to, independently and objectively read just the term and condition, I'm sure you will also have in your mind, so how do I assess whether this has been met? Right, there'll be a few questions coming up. How do I compute this percentage? It's from which period to which period? Employees. Is it all employees? Does it include part-timers or condies, for example, right? And then what does it mean by send for training? Okay, and if you look at the criteria, right, you can see, okay, it's a lot clearer. Of course, some of you may still say, it's not good enough. There's still areas that I need to further clarify, right? But it's definitely clearer. It sets out full-time employees, and it also sets out that it's not just sending the employee for training, right? It's not good enough. I want to make sure that they attended, and I need to make sure that they passed the assessment. And what does accredited organization mean? Right? Okay, it's based on whoever is listed on this website, etc. Right? And then they talk about employees cannot have resigned before a certain date. So this is definitely clearer, and there will be no ambiguity between all parties as to what compliance entail, right? So just one example. The one on the right is quite straightforward. It essentially wants to clarify exactly at what point in time the UAT is considered to have been completed. Right? So again, there's no ambiguity there. All right? Okay, so this is really just to reiterate that if any of the preconditions are not met, then we cannot proceed, right? So another example of criteria is shown here about improvement in student performance. So again, quite ambiguous. What does improvement mean? How do you measure improvement? What does it mean by student performance? So you can see that the suggested criteria that is clearer puts in a lot more specificity into how to measure the compliance with this condition. All right? Okay. Now, this is really the last bit, and then I'll hand over to Eileen, right? So the last one I want to touch on is on ability to get evidence. Now, before we accept any assurance engagement, we always need to make sure that we are able to get evidence. If I know that the grantee does not maintain proper records, they do not have a process in place to have a trail and for them to be able to furnish us with evidence, then we will not be able to proceed with the engagement. Okay, so the example here is on usage of equipment, right? Whether the entity themselves have proper documentation processes in place to ensure that the equipment is used properly for the designated purpose. And if I circle back to my earlier example on the utilization of employees on designated projects, if during the engagement acceptance stage, as I discussed with the grantee tells me, oh, actually, I never create separate charge codes, it's like I don't have proper keeping of the time charged by employees. If at that stage we know that it is unlikely we are able to get evidence, we will not be able to proceed with an assurance engagement already. So although sometimes the work itself is not about the internal controls of the company or the grantee, but the presence of these controls and processes gives us the assurance or comfort that we're dealing with a grantee that has proper record keeping process. So that is important. And so as grantors, sometimes it's also important to emphasize that to the grantee, it's notwithstanding that the subject matter itself or the grant conditions itself do not stipulate any internal control related matters. So we thought it would be good to highlight that as okay. So with that, I will pass on to Eileen to take you through the AUP engagements.